by introducing my colleague Piyush Matur, co-founder and CBO of Odyssey. I'll let Piyush introduce himself, and I'll go next.
Hello, everyone. Great to be with all of you today on this webinar. It's my pleasure to be welcoming you on this, hopefully what you'll find informative session on certain credit products that we're offering for soda companies like yourselves across Africa. So welcome again, and look forward to an engaging discussion.
Thank you, Piyush. So my name is Maxime. I go by Max. I am Vice President of Revenue here at Odyssey. And in this capacity, I lead most of our engagement with developers, EPCs, IPPs like yourself. I am a former developer myself, French originally, based in Cape Town, South Africa for the last 15 years, and probably as many years in the renewables sector. So without any further ado, let's jump straight into this presentation. So we are really excited to share with you the latest and the greatest at Odyssey that we've released to market now just under a month ago. That's essentially across our region in Nigeria, South Africa, and East Africa. And this product is called Construction Credit. The intent of this webinar is really to take you through, I guess, the foundations of our product, how it works, give you some background on the reason why we decided to launch this construction credit facility. And we'll have 10 to 15 minutes at the end of the webinar for Q&A. So if you have questions during the webinar, don't hesitate to type them in the thread, and we can attend to them at the end of the call. All right, so let's start by defining who is Odyssey. So Odyssey, we are the largest finance and tech platform operating across the sector. And we enable financiers and renewable energy companies to deploy more projects faster. So you may think it's a hell of a big statement, and it is, but we do it in two main ways to give you some context. So we do it by providing large DFIs and commercial banks with software enabling them to essentially deploy more capital into the sector, increase visibility, and dilute their risk when disbursing. We've done that successfully for a number of years with the likes of the World Banks across different electrification programs, and now we have different partnerships with large commercial banks across our different regions. Our the second way we do that is by deploying capital on behalf of large commercial banks. So, and we do it we've done that by creating a number of innovative credit products dedicated to the players of the sector. And today we're here to address one of these products, which is called Construction Credit. So maybe before we get into the meat of this webinar, let's unpack a few numbers. It will give you a sense of the depths of our activity. So Odyssey has essentially 2,600 platform members. So we have a large ecosystem which provides different tools and resources to developers like yourself. So we have 2,600 EPCs and developers using our platform daily, whether it is to tender for electrification program across Africa, procure equipment, access some kind of financing. So this platform is widely used by fairly large numbers of players to this day. We've got $1.6 billion of capital available on our platform. That's 1.6 billion that we're deploying on behalf of large DFIs through various financing programs. We have in excess of 30 partnerships in place with large equipment manufacturers, whether they are inverter manufacturers, module manufacturers, cable manufacturers. So we aggregate procurement from our platform members and enable you to actually access better terms with these OEMs. We have facilitated 2.3 million, the deployment of 2.3 million systems across our region. So it's, again, a fairly large number. We have an asset management arm where we are monitoring and tracking the performance of 1,600 operational assets. And as I mentioned earlier, we are currently managing for this refinancing program. So let's unpack the value of our construction credit facility. And one way to do that is to I guess, address and discuss the pain point experienced by developers, I guess, around the globe, and these are pain points shared across the sectors. So what is an EPC? Let's start by defining an EPC. So an EPC and a developer are essentially risk vehicles. So the mandate of an EPC is to identify, manage risk that are associated with project construction, right? So if developing and building projects was an easy task, EPCs would be redundant. So the reality is that there's a fair amount of risk associated with deploying these projects and building them. So your ability as an EPC to manage this risk will define your ability to be successful, but also to be sustainable as a business. One of the major pain points, one of the major risks that needs to be addressed on a daily basis by EPCs is working capital. So again, your ability to manage your inflows and your outflows accordingly and allocate your working capital the right way will define your ability to be successful. The difference between an EPC who can build a 1.5 megawatt system and a 100 kilowatt peak system is, generally speaking, sits in the ability to manage the working capital. The second pain point that we're addressing with construction credit is the general mismatch that exists between the credit line that you are provided as a developer and your project cash flows, right? And it's true in two ways. First, as a developer, if you need $1 million to build your pipeline on a monthly basis, generally speaking, you would potentially get $300,000 from your suppliers, whether that supplier is a local distributor or an international manufacturers. So you're always looking for ways to complement that working capital gap to build your project, and you do that by using your own cash reserve, or essentially by charging larger deposits to your end customers or to your buyers. That's the first reason. And the second reason is that should you have terms in place, should you have negotiated terms with your existing suppliers, these terms mismatch your inflows or your receivable on site during construction. We see local distributors and OEM providing 30, 60 days following collection of the equipment, which is great, and sometimes it's enough to build a project. But the reality, as we all know, is that there are delays happening on site all the time. So regardless of your project being delayed or not, you're still due to pay this credit line, when you reach terms. The third major pain point is that, by definition, EPCs are services companies. So they have a balance sheet that doesn't allow them to borrow from traditional lenders. Traditional lenders tend to have a fairly lengthy due diligence process, which doesn't really match the transactional aspect of our sector. So if any one of you has ever intended to apply for a working capital loan with your local bank, you would have realized that that's a very lengthy process, full of paperwork, and the reality is that you're quite likely to be denied that loan. And lastly, there are very limited alternatives in the sector when it comes to accessing working capital. So these 4 pain points really constitute the underlying reason why we decided to take construction credit to our market. So let's jump straight into it, and we'll define what is construction credit. So what is construction credit? It's an industry-specific credit facility designed by industry experts for the industry. So at Odyssey, we come from the sector. I'm a former developer myself. We've got colleagues coming from DFI, fund managers, equipment manufacturers. So we've got a small ecosystem representing the set of skills required or that are needed across this entire ecosystem, which is the one of renewable energy. So our ability to identify and manage this risk and disperse accordingly and is increased by the skill sets we host within Odyssey. It's on-demand, short-term credit dedicated to equipment procurement. So there's a lot in this sentence. On-demand because we are able to deploy and provide credit in 5 to 10 working days by the time you've applied for it. Short-term because we're looking at terms that go all the way up to 12 months. And it's dedicated to equipment procurement. And we'll get into that a bit later again. But in essence, we will not provide EPCs with capital directly, but in other words, we'll pay your supplier on your behalf. Number 3, we have settlement schedules that align with your own payment milestone. So if you're a CNI developer operating in South Africa, you generally have payment milestones that are linked to project delivery. So we would essentially expect you to pay us back only as you receive payment from your own customers. If you're based in Nigeria, for instance, you are likely to develop projects on the back of an RBF grant. So we will only expect you to pay us once you receive payments from the World Bank. Lastly, we provide industry most competitive rates. So again, looking at short-term off-balance sheet capital that are available on demand and on the fly, you'll see that our rates are fairly attractive and competitive. And above and beyond all of this, these are digestible rates. So we understand where your margins sit. We understand what it takes to build a profitable business in the sector. And that's why we've designed these fees to be digestible by yourself. So let's unpack really some of the terms associated with our construction credit facility. So the way Odyssey operated that, we position ourselves in between yourself, the developer, and your suppliers. So instead of paying fairly large deposit to your suppliers or everything upfront, we will then take that burden of procuring the equipment, which often account for 70% plus of your project value. We pay your suppliers in full. We would expect a short deposit from yourself, a small deposit from yourself, and you're only expected to pay us back during the construction phase. So the amount that we're covering at the moment are from 2.5 to $5 million US, depending on your project value, essentially. So we'll need to take a look at your BOQ and your funding gap requirement on a per project basis. We can finance projects of up to 12 months. So let's bring some clarity on the 12 months credit period here. It's not 12 months for everybody. It's directly linked to the time it will take you to build your project. So whether COD happens in 6 months, if COD happens in 6 months' time, we will expect you to cover and to settle the facility over 6 months. It's just that we can provide credit all the way for a credit period up to 12 months, sorry. So the deposit we would generally charge to kickstart the facility are from 15 to 50%, which are non-refundable. So we would charge it 15 to 50% to place the order with the supplier, pay the supplier in full, enable you to collect the goods, take them to site, build your project. If you're not able to essentially settle the facility, you would be forfeiting that deposit. The final value of that deposit is very much project specific and EPC specifics, and will be essentially decided by a credit committee internally. So as you apply for the facility, within these 5 working days, we have a credit committee that review your application and will decide the final amount of that deposit required in order to kickstart the project. Let's look at the cost of the facility now. So there is an upfront processing fee and there's a monthly fee. The processing fee applies to the full order value, while the monthly fee, sorry, only applies to the outstanding debt. So if you've got a $1 million credit facility with us, you would pay us $150,000 US, and you would only be borrowing at $150,000. So your interest that you're paying on a monthly basis is on your outstanding debt. And as you settle the facility monthly or in line with your payment milestones on site, the cost of your working capital facility keeps on decreasing. What type of security we'd be looking at? So we generally look at an escrow of milestones payment from your client. So we need to look at who would be the one essentially buying the system, and we will escrow that on your receivables. So just to bring some clarity on what is an escrow, it's a tripartite agreement between yourself, ourselves, and your bank, stating that as soon as payment is received for this job, the first one to be settled, or the first I would say contractor or debtor to be settled would be Odyssey Energy Solutions. And again, approval time is 6 to 7 days. So let's chat further about why is this facility really unique. So it's really on-demand credit matching your cash flow variability. So it really enables you to float your cash flow, your net cash flow during project delivery, and keep them positive. It's off balance sheet because practically you also don't own the equipment. We own the equipment until we fully paid. So it doesn't impact your capacity to borrow from other traditional lenders. Flexible repayment schedules. Again, we take a view on when you get paid and align the terms of the construction credit contract with your receivable. Very important point, it's hassle-free, quick turnaround time. We generally take 5 days to review your applications. You can apply directly from our platform. We've digitalized the process completely. So it's really fuss-free and paperwork-free, and everything can be done on the platform. It won't take you more than 30 minutes to submit your application. And again, there's no surety. So we don't ask for personal guarantees from the founder or the business owners. And again, let's reinforce the rates and terms. Some people may think that 1.5% per month is expensive. In fact, it's not really when you're looking at off-balance sheet short-term capital. So let's highlight further the cost of the facility. We've got on the screen here a typical repayment schedule, and I'm not going to spend much time onto it, but we're looking at, in this case, at a shipment value of just below $800,000 US. The EPC in that case was charged 15%. So the lending amount is $650,000 US, and the terms of the facility are 6 months. The processing cost was 2% upfront, and then there's a 1.5% working capital fee kicking in monthly. So the repayment schedule, essentially, the EPC was borrowing 650,000 Rand. 2 months later, they've achieved the milestone on site, so they're liable to pay 50% of the principal debt. Cost of the facility was 1.5% monthly over 2 months. So it's 1.5% over 2 months of 650,000 was 19,500. The total amount payable after 2 months on site is 344. And you can see that's just essentially your repayment schedule over the 6 months. The cost of the facility in this project specifically was 5.25%. So if you annualize that rate, you'd be looking at just above 10%. The reason being is that you're only due to pay working capital fees on your outstanding debt, not your principal debt. Let's look at this illustration and take a view on what it means for you truly. So this is a typical project milestone for a CNI project. And we'll be looking at, it would take you 2 months to 4 years to develop a project. By the time you've been appointed as an EPC, you win, you can charge a deposit to your customers. And then generally speaking, you've got a fairly limited amount of time to plan and procure for that project. You get to site and then you collect payment as you achieve these milestones on our on-site, sorry. So in this case, you're looking at a project of 1.5 million US, 15% deposit, 50% once the equipment's on site, 25% on commissioning, and 10% on handover, which is fairly standard. What does it mean for a construction facility standpoint? We would essentially procure for you here worth of south of $800,000 US. You pay a short deposit, and you only pay us as you've achieved these milestones, right? So you'll see on the next slide that you remain cash flow positive throughout, because your cumulative inflows are always higher than your outflows that you owe Odyssey. So this slide, we're looking at a conventional 30 days terms that you would have to pay if you were buying from the local distributors and you had 30 days terms. You will see that essentially your net cash flows are negative. So it's the same project we're looking at again over 6 months. We're comparing your cumulative inflows versus your cumulative outflows. And you can see that from month 1 to month 3, the project will be running cash flow negative because the bulk of the procurement is to be paid after 1 month on site, when meanwhile your receivable has still to come because you haven't achieved your milestones. That's another way of illustrating this negative cash flow, these cash flow burdens on site. In orange is your cumulative cash flow or cumulative inflow curve. In blue, your cumulative outflows, and in yellow, your net cash flows. And you can see that yellow line goes below the 0 line, so you're running negative. It really becomes a problem, as you know, when you're running multiple projects concurrently, and you don't want your general business cash flow to be reflecting a single project cash flows. But that's the case very often for multiple EPCs who don't have access to these short-term working capital facilities. Now let's look at the same cash flow tracker using Odyssey Construction Credit Facility. As you can see, you get your inflows. It's exactly the same inflows we were showing you on the previous tables. We've just assumed that the bulk of the procurement is happening through Odyssey, and then you're still procuring some of the equipment from traditional distributors or manufacturers. So after 30 days, you'd be liable to pay the balance of what is not procured using our construction credit facility. And your outflows, in our case, would be completely aligned with your inflows. So as you get paid, only then you are expected to pay us back. And the net result is a positive cash flow during project delivery. And that's an illustration of this cash flow curve. So I'm just going to look at the thread and see if there's any question we should jump on briefly. I can see we've got 3 questions already. We'll dive into it in a second. So let's look at the step-by-step of this transaction. What do you need to do to access the facility yourself? So you can go onto our website. There'll be a link shared on the thread if it hasn't been done already, and you can pre-qualify. So we can apply online to be pre-approved, and within 48 hours, you'll be contacted by one of our team members who will either notify you to tell you that you've been pre-qualified or inquire about a 15-minute introductory call. Once you're pre-qualified, you can start submitting material about your EPC. So we need to onboard you as an EPC partner. It's a one-off step where we'll diligence you and your business one time. And once you diligence, you're on our system, and you can start accessing the facility as you sign your projects. Step number 3 is project due diligence. Now we've assumed that you've been onboarded as an EPC, you are on our system, we're familiar with you, we are comfortable with your ability to pay us back. And then as you sign your project, you would submit essentially your signed cost proposal, your BOQ, funding gap requirements for our credit committee to review. As we review your project application, we'll provide you with a quotation. That quotation will highlight essentially the final value of the construction credit facility, the settlement schedule, and the deposit we require. That deposit, as I mentioned earlier on, will vary from project to project, and it's risk profile specific. Obviously, the higher the risk profile of the EPC or of the project, the more likely you are to pay a high deposit. Now you've paid the deposit, we'll deliver the equipment to site. You can start your constructions, you move on, you build your projects, and lastly, we'll just invoice you. Whether it's a bullet invoice on commissioning or milestone related, it will be generally speaking aligned with your construction contract you have with your off-taker, whether that off-taker is a traditional C&I customer or a large DFI. I'm just looking at time. We've got plenty of time. So let's just have a quick look at what the platform looks like. So as you go onto our website, you'll see that it's a 3-step process. Now you've pre-qualified. We're looking at a screen that you'll have to look at directly once you pre-qualified, where you can start sharing your application. So you can see you've got an overview of the program directly. And then you can start by providing us with company details. That's on the application. You can click on application, and we'll ask a number of questions about your company. Generally speaking, you can expect to share your audited financial statements, your management accounts, the list of the projects and the sites you've built to date. It's really for us to build an understanding of the expertise you've built over time as a business. But also take a view on the financial. Very similarly, that's the project detail page. Once you've provided your company profile or your company details, you can provide project detail specific. You can submit application for fundings on up to 5 projects at the same time. And then, of course, we'll review the application and get back to you within 5 to 10 working days, as we've previously disclosed. Okay, I think it's time for Q&A. I believe we've got one question to answer. Daniel Madwagu, do you also provide this facility for C&I project developers in Nigeria? Do you have to get paid before repaying the facility monthly? So in this case, we're looking at C&I project in Nigeria. Yes, we can definitely support you there. Daniel, I don't know if you are able to speak, but I just want some clarity on what you mean by that I have to get paid before repaying the facility monthly. In Nigeria, we generally procure from suppliers that are overseas, not from local distributors. But what I'd like to suggest is that we get in touch and take a view on your suppliers directly. We may have a relationship with them already.
Yeah, so what I meant, thank you so much for the time I'm allowed to speak. So what I meant basically, for a number of CNI developers in Nigeria, right? When you have your PPA would be post-paid. So at the end of the month, you submit your invoice. In some cases, it's actually 30 or 45 days post-service delivery that you get paid. Now, my understanding of your facility is that if it aligns with the construction contract or the PPA, that means it is after the developer has gotten paid that they will now make repayment for the facility. About in a situation where the repayment is 45 days, how does that apply?
Piyush, do you want to jump on the answer, or do you?
Sure, Daniel. So I think the first thing to note is that what we're offering here is a short-term construction credit to help you through the construction phase. There is an operational phase after that where you are either offering a PPA or offering a pay-as-you-go model. There was a separate question from Edwin as well on the chat, who wants to use this facility to finance a pay-as-you-go offering for clients. That's not the purpose of this facility. So this particular construction credit product is very short-term and helping you procure and build your asset. But once you have turned that operational and commissioned that asset, you have to arrange the sort of long-term either PPA financing or project finance for that type of financing. So our product is not sort of that long-term financing. Our product is simply helping you procure early and efficiently, and then also construct the asset. I hope that's clear and answers the question.
Yeah, well, it does answer it to an extent. I mean, if you have a PPA for 5 years and you go through the construction phase for over a period of 2 months, obviously you still have 10 months to essentially make the repayment, if I'm not wrong. And within that 10-month timeline, of course, you would have been making arrangements to raise funding from either the DFI or debt managers. But within that period of time, that 10 months, now the question is, the repayments, what would things is expected that you're going to pay back from the inflow from that project? If the inflow comes in after 45 days, what will now be the repayment timeline or plan for that facility? That's actually where the question was going to.
Yeah, I think when we mentioned that we are able to offer this facility for up to 12 months, that 12 months is still intended to cover the construction period. So certain projects like mini grid projects or other CNI projects can take longer, right? It is still not intended to cover your pay-as-you-go or PPA financing period. So if you have commissioned the asset, the best thing to do would be to look for long-term project finance or PPA financing to cover that 4 to 5 year period, and then use our facility only for that 2 to 3 month period, during which you are building your asset. Why is this facility useful even for that phase? Well, you are a developer yourself, so you understand the chicken and egg problem with the financiers. Like they're more comfortable financing projects which are already commissioned. So, but you can't commission a project unless you have financing to build it, which creates a chicken and egg problem. So you use our facility to resolve that and secure not only long-term financing with greater confidence from financiers, but then also at more possibly cheaper and more attractive rates, because you now have presented to them a de-risk project. It doesn't carry any construction risk anymore. So use our facility to ride that construction cycle and de-risk your project, and then replace our small short-term credit with a more appropriate longer-term either pay-as-you-go financing or PPA financing, as the case may be, depending on the nature of the project. But only because our facility can go up to 12 months doesn't mean that it is suited to cover your repayments from your PPA cash flows. So for that, you should anyway raise long-term financing. Does that help, Daniel?
Yeah, certainly does. Thank you so much.
Thank you.
Great.
And Edwin, I've also answered your question in the process. You also had a question about pay-as-you-go cash flows. I assume you are deploying small solar systems, SHS or micro rooftops. But yeah, if you can speak and confirm whether that answers your question. Edwin, you can speak.
Yeah. You may need to unmute yourself, Edwin.
There. Yes, thank you.
Yes.
Thank you very much. Yes, that has answered my questions very well. Thank you. Thank you. In fact, it's got me interesting because you know, I had applied 3 times and I didn't get a feedback, but you said you're going to look into it. But after this, I'm going to log into the Odyssey platform, and then I will upload my 5 pipeline projects.
Yes, Edwin, we checked the status of your application whilst Max was presenting, and I think it's showing the status as the projects do not qualify. So as I think you mentioned here, you may have received a similar message as well. So as I described now, this short-term credit is not suited to finance pay-as-you-go cash flows over a 1 to 3 to 5 period. For that, you should raise separate financing, but this short-term procurement and construction credit can help you cover the procurement and supply chain period. So please use this credit product in combination with your long-term financing.
Yes, thank you. I have understood that very well. This is very good for this meeting. When I do the application now, that which I will do on the Odyssey platform, I will now not apply for the long term, for the pay, you know, the pay as you go, or what we call list 1. I will only ask for only construction credit for not more than 12 months. So when I apply for it, at the back of my mind, because Odyssey has helped me a lot for the last 3 years, I must say that they connected me to SIMA funds. Now they've connected me also to I&M Bank. They connected me to Umba Bank, that is Odyssey's in Kenya. So I will use the construction credit to set up my clients, while the other ones who are doing a long-term credit now will come into play. So I've understood and will be able to restructure that when I do my application after this.
That's great. Look forward to receiving your application. Thank you.
Thank you. Okay.
With a question next from Alex Wanumi. Please excuse my pronunciation if it's wrong. Which countries are eligible, Piyush?
Yes, we are open for business across whole of Sub-Saharan Africa, including South Africa, and the entire SADC region. So yes, we welcome applications and projects from all these areas. We're also open for business in India. So if any of you have any business in India, please feel free to approach us for this construction credit facility.
So Marius Arms had a question. Can we procure from our own supplier? Marius, I'm not sure if you're still online. I believe you had your hand raised. Looking here. Marius, yes. Hi, Marius.
Yes, I just have a quick question in regards to procurement. Obviously, there's an interest on the loan, and then obviously you want us to procure through you. But is it possible to do our own procurement for we have relationships with our own suppliers or manufacturers?
Hi, Mario. It's good to be hearing from you after a while. To answer your question, yes, absolutely. You are very free to use your own suppliers as well. We'll have to go take them through a certain sort of small and efficient diligence process, because we only work with vendors and suppliers who are otherwise ESG compliant. Yeah, subject only to that, we're very happy to work with suppliers of your choosing.
Okay, thank you.
Good. Marius, I believe you also submitted an application online, if I remember correctly. So you should have had login details being shared with you. You're muted again, Marius.
Yes, we submitted for a project a couple of months ago, but yeah, we didn't get any response, so we moved on. We kind of have relationships with all the run-of-the-mill tier one manufacturers. We do our own procurement, and this can help us or work for us, but we would like to retain our relationships and buy directly from our suppliers.
Perfect.
Yes, many of the solar companies we work with express that sentiment. So as I explained earlier, that's very much how we also work. There is a very strong chance that the suppliers you work with are already onboarded and diligenced by Odyssey, but if not, we could do that swiftly.
Okay, no, that's great. Thank you.
Thanks, Marius. Next question is from Alex. What's your level of local support for Kenya and the greater East Africa?
You want to take that, Max?
Yeah, so we do operate in Kenya and East Africa, generally speaking. We have a team there. We've got a partnership with Iron Bank in Kenya specifically. So we'll take a look at your projects. Alex, can you specify if you're looking at CNI projects and the type of projects you're looking at building in East Africa?
And also, what type of support are you looking for? Are you talking about after sales and warranty claim assertions, or are you looking at financing support?
Yeah, I read the letter, but you're right to ask the question. Alex, feel free to speak. Let's move on to the next question, and maybe we can get back to Alex in a second. We've got SIA Africa. Here we go, Alex.
Can you hear me, gentlemen?
Yes.
We can hear you now. Yeah.
Oh, fantastic. Sorry, I was just asking about your presence in Kenya and the region, and I've understood your response. But my second question was, if I can take the opportunity to ask it right now, is for those of us who probably have clients who prefer the pay-as-you-go model, do you have such a facility that can assist with that? Thank you very much.
So Alex, I don't know how familiar you are with the full suite of financing programs available on Odyssey, but I will encourage you to visit our website and look for financing programs under the financing section. We run a number of different programs covering almost all of Africa and parts of the world globally, which are not necessarily capital provided by us, but capital provided by our partners. So please review the list of programs available. Many of them cover solar home systems and small scale solar for productive use, which you offer under pay-as-you-go model. So it's possible that you would qualify for one or other of those programs. So I would encourage you to look at our website and specifically the financing section in the website for solar companies.
All right, thank you, gentlemen.
Thank you, Alex. Next question is from Sia Africa. Good day. Do you give credit to PV solar facility machinery, exempt drill rigs for subcontractors? Do you want to jump on this, or should I answer that, Piyush?
Please go ahead.
Yeah, I mean, at these stages, yeah, the short answer is no. We would really look at providing funding where the resellability of the equipment is high. So we need to have an alternative use in the case of an EPC defaulting. Or unless we have some kind of a buyback guarantee with the machinery supplier. But I guess to answer your question simply and shortly, at this stage, we won't be able to support you with this type of machinery. Peter Kimuli, my question is whether you can support a developer with specific requirements on the equipment suppliers. If I have to procure certain equipment from a specifically named OEM. I think we've answered that question, right? Peter, did you get clarity from Piyush?
Yes, and to repeat it one more time, yes, we absolutely can. In construction credit, we are taking security on your customers' cash flows by escrowing them. So we are less minded about what product you and how sort of customized and bespoke it is. But generally speaking, we are able to support a wide variety of equipment.
No, thank you very much for that, Piyush. I think you already answered it previously, and that was clear. Maybe just to follow up question: do you take, or this kind of credit, do you take a view on the off-taker or the sort of client if it's a EPC type deal?
Yes, we do absolutely take a view on the client, and as Max explained, we look to escrow their cash flows. That's the mechanism we use to keep this credit very simple to operate, rather than tie you up in financing agreements. And that's the mechanism we use to also keep it off balance sheet for you, so that we're not sort of really loading up your balance sheet with more payables. So yes, we do have to look at the off-taker and their ability to honor their contract. In most cases, that is not a problem, because if you as a solar company have chosen to work with them, you've obviously done your basic checks and have gained confidence yourself that your client is creditworthy, your client is able to buy the asset which they have contracted you for. So we will lean on your assessment and diligence of your own clients as well as do our own checks. But that is an important aspect of how we evaluate the opportunities for providing construction credit.
Thank you, Piyush.
Thank you, Peter. Next question is from an anonymous attendee. What size range of installation is considered for the credit facility? Also, are EPC companies in North America considered for the credit facility? I think I can answer this question if that's okay with you, Piyush. It's not so much about the size of the system. When it comes to a cap, we can go all the way up to 5 million US. And we'll work with EPC from North America as long as the project is in East, West, or Southern Africa. That's the reality. We won't look at financing projects that are outside Africa just yet. Moving on to the next questions. Romanus, do you accept more than one request from a developer at a time? That's yes. So the short answer here is yes. You can apply for up to 5 credit facility or 5 projects at the same time on the platform. Next question is from Alex Nzioka. Do you only support solar energy solution, or can you include hydropower solution as well? We can take a view for hydropower solution as long as we get some kind of a buyback guarantee or I would say transaction reversal mechanism in place with your equipment supplier. because again, we don't have an alternative use for that technology. Should you default in settling the facility? So we'll take a view on a case-by-case basis. We need to have reassurance that the takeout financing is in place, or that there is a transaction reversal mechanism with your supplier of technology. I believe that's it. Any further question from our attendees? I got Alex with your hand up.
You've already answered me. My question was whether you also support hydropower solution. You've already responded to me. Thank you.
Great. I think that's it. Then we've got no more question on the thread, but I can see a few hands raising. We've got Daniel with your hand up. Likey.
Good afternoon.
Good afternoon.
Yes, my name is Ike from Clatech, Nigeria. I want to know whether the facility also is available, for Nigerian companies. And then two, we would like you to make the presentation available to us so that we can actually study and understand the dynamics of the facility.
Totally, Lucky. I think what we'd like to do is set up a separate call with our team in Nigeria, and we can have this introductory session and essentially circulate the material you require and answer any questions you may have after this webinar. Would that be okay?
Yeah, the one you presented. Can we just have it, please?
Yeah, we'll make it available.
What is that?
Yes, we'll circulate it. Totally.
Okay, excellent. That's fine. Thank you.
Pleasure. Alex, I believe you had your hand up as well.
Sia is also waiting in the queue.
Hello, Sia.
Asked and answered, Maxime. Like I said earlier, it was my question about the alternative hydroelectric power. Thank you.
Great.
Good afternoon.
Hello, Daniel.
It's Sia.
Yeah, hi. Okay. Go ahead. Yes,
Hello.
go ahead. When you're
Yes,
done,
Sia,
I'll
please
ask.
go ahead.
Good afternoon, gentlemen. I posed a question earlier about the machinery. Do you have a different option in Odyssey for such?
Yes, I can take that question, Sia. So we obviously have a procurement business which joins up with procurement credit and construction credit to provide you a sort of packaged solution. So when you interact with our procurement team and start discussing your requirements, you're very welcome to put forward or have a short list of your own preferred suppliers, and many solar companies have that too. But they also benefit from exchanging notes and matching up the quotations that they have received with the quotations that Odyssey is able to arrange for them from Odyssey's own preferred suppliers. So you don't have to accept it, but it's like extra value add for you. We scur the market and bring back to you information which you can then use to come to better procurement decisions. So if you were thinking a certain model of, say, an inverter at a certain price, now you know that certain alternatives exist, maybe at a lower price with slightly different specs, and then you can decide what do you want to go with. So yeah, there is value to be had in both in terms of pricing, but also then having credit available to proceed with your procurement right away.
Yes. Okay, I think maybe I might have posed my question not in the way you understood, because I was asking more on the machinery that's used on on construction because we are a subcontractor and we are mainly in the construction of the facilities. So I was asking machinery that's used as drill rigs, your huge machinery. Do you support that?
We don't currently support that. We are focusing on solar and ancillary technologies, but we haven't expanded our facility to cover machinery, on-site machinery, which you were talking about.
Okay. No, thank you, sir.
We've got two more questions.
Okay, so can I ask now?
Yes, Daniel, you go.
Yeah. Okay, so my other question would be, so for procurements that I understand you can go ahead with our own preferred supplier. So like locally here in Nigeria, if I get BOQs or rather quotations from local suppliers, how would that normally work? How long would it take for you to go ahead and go ahead to make payment if the facility is approved? What would typically be the time frame that this would take?
Max, you want to bring up that slide one more time, the whole process, and maybe overlay some timetable on that to answer this question comprehensively? Because I imagine Daniel is asking it, but many others might have a similar question too.
Yeah. So the overall process, by the time, let's assume that all the documentation has been submitted about your company and about your project, we can due diligence your company and your project within 5 to 10 working days. The reality is that very often you will submit information regarding your company first, and then a few days later or a few weeks later, as your project comes through, you will due diligence, you will submit project information. But the short answer to that is that we can essentially come to a conclusion regarding your eligibility and your project eligibility for construction credit within 5 to 10 working days by the time you've been onboarded as a company, which can be done essentially within a few days. And once you're onboarded, having a look at your project would take another 5 working days. Does it answer your question, Daniel?
Yeah, it does. So that means equipment delivery, we're looking at 10 working days. Essentially, is that what you're saying?
No, sorry, that's okay. I misunderstood your question. So I was referring now specifically to the due diligence process for you to qualify for construction credit.
Okay.
When it comes to getting the equipment on site, it really comes down to where you're procuring the equipment from. So if you're procuring from an overseas supplier, an overseas OEM, it will take a few months to clear the goods in countries, as you know. So it's all subject to the goods origin. But you're looking roughly from the time we pay the deposit to the time you can take possession of the goods, maybe 3 months, if it's coming from overseas suppliers again. Because my understanding, Daniel, is that you're in Nigeria as well.
Yes. So if we want to buy from a local supplier, of course, that reduces the lead time for delivery of the equipment. Am I correct?
Yes, of course. The lead times for local procurement will be much shorter.
Yeah.
Okay. All right. Thank you so much.
This credit covers not only the procurement part of it, but also the construction cycle. So if it'll still take you some time to build the asset, yes, of course, the total time involved will be less than what it would be if you were importing equipment, but there is still a need for working capital for you to ride that construction phase. So for which this facility might still help.
So about onboarding the vendor, right? Like a local vendor. If you want to onboard a local vendor, what would typically be the process and the duration so that we can start speaking to them about getting registered with Odyssey? This is what we're trying to do so that it makes the entire process fast for us. What would that involve?
I think the process is no different. You please apply with your projects on our website for this facility. And once you provide all the details, we will come back to you swiftly to first qualify your cells, the project, and then finally say that, okay, well, for this part of the total procurement that you are planning, we do not currently have a certain OEM onboarded. So let us, please introduce us to that OEM so that we can start that process. As I mentioned earlier, usually OEMs or sellers have a ready docket available to help buyers do diligence, because globally speaking, everybody requires that and everybody understands that. So if they have all the information readily available, then the whole process is very swift.
Okay. All right. Thank you so much.
Good. I think we've reached time. We've got 2 minutes left. Oh, there's one more question that just came in. My company is into solar. What solar equipment can be purchased on credit? At the moment, Opeolua, we're looking at the main equipment mostly, so inverters, batteries, modules, and we'll look at the rest of your BOQ on a per project basis. But generally, you can assume that we will be looking at the main equipment primarily, and then we can take a view on the rest of your BOQ. Good. I think it's time. If there's no further question, I think we can wrap up the webinar. Yes, like I believe you just raised your hand. You're still muted. You may need to unmute yourself. Okay, I think it's a wrap. Thank you everyone for joining us and for all these questions that came at the end. If there's any outstanding question that hasn't been answered, please reach out to us directly on our website or by emailing us. I believe the email address has been shared in the thread of this call. So thank you all, and we hope to hear from you very soon. Bye-bye.